Hey traders, Clifford back with another video on trading the charts. So today I wanted to go over why every trader needs to have a trading plan written down and actually journal all of their trades for the best odds of success. So with that being said, let's rock and roll. Okay, so trading plan, what is it? I mean, a lot of traders have heard of having a trading plan. Some traders may even use one. But, why do we really even need one? Well, if you think about it, it's like, I mean, there's gambling and there's trading, right? What's the difference? So, like, I mean, if you're just gambling in the market here and there, taking a shot, taking a long shot, kind of like lottery tickets, like, you're buying a crypto once in a while, hoping it goes to the moon, or you're trying to win big or something. That's definitely fun stuff to do, and it could be very excited, especially if you're winning. But if you ever, I should say, want to take trading to the point where one day it can become something more than just gambling, such as an income or a business or something like that, then you really have to have a business plan because trading is basically a business. Now, I am not a full time trader yet, although that is my goal. And I've learned over the years that in order to achieve that goal, you really do have to take it seriously, like a business. 90% of people who try trading normally fail within the first year. That's a statistic, actually. So the odds are against us. And the only way to improve those odds, in my opinion, is to have a business plan. So, similar to any other business, like businesses, they pay advertising, they have overhead, right? I mean, the beautiful thing about trading is we don't have any of that. All we have in the end of the year is profit and loss. And of course, what we want is profit because that keeps us in business, of course. So, all right. So how do we do it? Well, basically, you have to define rules for every single trade. And a great thing about TradingView is you could actually create a journal of every single trade. You could take like pictures, you could take screenshots. So here's an example. So let's say I'm looking at this market here. What is this? Gold, right? And I see, I see a signal that I think looks good, right? So before I pull the trigger, right? And again, it doesn't really matter, whatever vehicle you choose, stocks or options. I like the futures market and the forex market. That's what I focus on the most. But again, it could be crypto, it could be whatever vehicle you're trading. Why are you actually in the market to begin with? Think about it, like why are we pulling the trigger on this trade? You got to have rules. So what I recommend is something like this. So let me give you an example. So let's say we're looking at gold and I think it's a good buy. Well, I don't just want to look at my charts and say, you know what, that's a good buy. I'm going to buy gold. I want to follow rules. It's like a systematic approach. So you create rules for you create a trading system basically, and that's your business plan. So here's an example. So I'm pulling up. So by the way, TradingView allows you to do this pretty easy. I'm going to publish idea, right? And of course, I could go public. Everyone's going to see it, right? Or I could even do private if I want to keep a private trading journal. So, but the reason you want to have a journal, in my opinion, is because trading is a game of probabilities. And sometimes we make mistakes. Sometimes we do great, sometimes we do great things in a trade and we want to remember we did that. Having a journal lets you go back and study the mistakes you've made in the past. So hopefully you don't make them again. That's basically what it is. So here's an example. Trading plan rules, right? I just created this recently and it's a new year. So I want to make sure that my trading is, you know, according to my business plan, right? So here's an example of my rules. Now, again, you don't have to use these rules. Obviously, you're going to use your own rules depending on what kind of trader you are, Or maybe you need to sit down and get out a pen and paper and write your own trading rules, because that's how you create your business plan. What works for one trader is not going to work for every other trader. But here's an example. So my trading rules is I'm going to risk 1 to 2% of my account. This is very important. This is the first thing that you want out the gate. You want to have your risk parameters. Let's say I have $10,000. Okay. So I have $10,000, and, you know, I'm going to risk 2% of my 10,000 maximum. I'm going to risk, what is it? I'm going to risk like $200, right? On a losing trade. Um, some people do the risk management a little different. They might say, well, I got $10,000. I'll divide that by 20, which is kind of like similar stuff. 10,000 divided by 10 would be what? $1,000 a trade. 10,000 divided by 20 would be $500 a trade. So that'd be more. That'd be approaching like 5%. I don't recommend doing that, but again, every situation is different. Whether you're trading options or futures or stocks, obviously you're going to decide what portfolio risk parameters you have. But this is the first thing you want right out the gate. Risk. These are basically your rules for how much you're going to risk on every trade for the full year. Okay. So in this case, I'm risking 1 to 2% on every trade. Reward ratios. This is very important too. I went over this in one of my other videos about money management. If you didn't see that, check out that video on money management. But you know, rules for taking profits, basically reward, right? How much money am I making to how much am I risking? If I'm risking $1, I want to make sure I profit at least $2 or more, or $3 or $4. If I'm risking $100, I need to profit at least 2 to 300 or more. You always want to have a minimum 2 to 1 risk ratio, meaning if you can't make double what you're risking, then pass on the trade, in my opinion, because it's not worth it. 2 to 1 or better. So that's the second rule. And then I have my actually trade confirmation parameters. Now again, this is just me. You will create your own. But I only want to trade a seasonal market pattern. So every year, the only reason I want to be in the market is to try and follow the seasonal market patterns of the markets. So if it's commodities, I'm going to look for seasonal patterns in oil or in gold or in, the treasury bonds or in the stock market or whatever I'm looking at. I only want to trade if I know there's a historical seasonal pattern that has a high probability of happening. So is this a seasonal market I'm trading? And then I would put, yes, it is, right? Because obviously I agree with my analysis. I'm looking at gold and I see I'm going to buy it in December or January. Historically, that's a good seasonal pattern. So I'm like, okay, yeah, I'm okay with my seasonal analysis. Let's go to the next one. Chart patterns. I'm only going to take a trade if the market technically confirms that I believe that it's following the seasonal pattern. So example, if I'm looking in December for a seasonal pattern in gold and I'm looking for some type of bottom formation, well, I see it right here. It actually happened, October. There was a little bit of a bottom here, and then boom, it broke above the. This is actually in technical analysis. You could call this a double bottom or a triple bottom. If you're not familiar with that, definitely check out my other videos. But basically you buy when it breaks above resistance. So I believe this is a bullish signal. Okay, yes. So now my chart confirms that I'm willing to take the trade. So did the chart pattern confirm? I'm going to put yes. The third rule that I like to use is institutional positioning. So I like to also see if there was a momentum behind this break. So what I do is I made a video about this also. It's called the commitment of traders. I'll pull up this indicator here. I normally don't use indicators, but this I use because it shows me what the institutional markets are doing. So I could see here that they had a huge drop in short positions right here, 141,000 all the way down to 100,000. Now, if they're closing 40,000 short positions in 1 week, I think that's a pretty significant confirmation that they're becoming bullish. If you don't know what I'm talking about, check out my other video on commitment of traders. All right, let's move on. So I got all three of these agreeing. So now I'm ready to place my trade. So like Now, again, I would have bought back in December, but I'm going to use today as an example because if not, it's a little hard to see the prices, but of what it did back in December versus where it is now. So let's use today as an example. I normally wouldn't buy at this level, although it doesn't look bad as a buy either. I would wait for a pullback usually, but let's just use this as an example. So today the market's at what is it, 1874, and yesterday I saw a signal. Here's like a little bullish. It's not exactly 100% bullish confirmation, but it was a pullback, and it tested and rejected this resistance zone. So, all right, yeah, I'll take a shot, right? I'll buy that. So I put in my order to buy one gold contract at 1840. Okay, this is my buy order. These are my entry rules, right? So I got entry rules, exit rules, and then trade management. And again, this is just an example of what you could do. This is what I do or what I'm going to start doing. So trade entry, buy one gold contract at 1840 in this example. Trade exits. Now I need my stop loss, right? Because obviously, if it's a losing trade, I got to know when to get out. So I buy here and I put my stop under here, right? So I'm buying at 1840, trade exit, sell one gold contract, $1,800. Okay, that's my stop loss. I'm risking $40 on the trade. I'm sorry, 40 ticks on the trade in gold. Which, if you're trading the smaller contracts, it could be a couple $100 or whatever. Um, and then finally, but if it's a winning trade, remember I want at least 2 to 1 or better. So I'm going to sell it when it hits 1920. That's my limit order. Kind of like a set it and forget it. I don't even need to watch the market. Once the trade is in, the outcome will be achieved one way or another. Either it's going to be a loss or it's going to be a profit, and I'm going to hold until one or the other occurs. Finally, I have trade management. Um, so trade management is kind of like what you're going to do if the trade goes in your favor. So, in my opinion, what the first thing I would do is I would move my stop to break even after the rally to remove the risk out of the trade. And this is very important because if you bought at 1840 and now the market jumps to 1880, I mean, why keep the stop loss? Sometimes you want to move your stop to break even, so that way you're not even risking any more money in the trade. So that's always a good idea too, to remove risk from the trade. But again, these are just examples. And then finally, maybe what I'll do, right? I'll take a screenshot, right? I'll go here. Can I do that? How do I do that? Copy chart image. I don't know if this is gonna work. Let me see. Copy link to chart image. Okay, copy link. Let's try that. Copy link to chart image. I go there, and then I paste it here, maybe, right? And I'll just do a private one now, so you can see how this is a private trade journal, right? And then I could put here gold trade January 6th trade journal gold, right? Something like that. Put that there. And then that's it, right? I got my notes, I got everything, and then I hit publish private idea. I think this is how you do this. Never done a private idea before, but we're going to find out right now. Publish. Boom. There we go. So now the idea has been published, but it's my idea. This is my personal trade journal, and I can add to this. So, like, here's my rules, here's all my stuff, right? Here's my trade. And now I can actually update this idea. So, like, let's say it was a winner, I can put later on profit target achieved. I think you could do it right here. Or, okay, no. Oh, yeah, here it is. Here it is. So, like, let's say it was a winner, closed, target reach, boom, update idea. So now the trade's over, right? Um, so there you go. That's one way how you can actually use this platform as a journal. So I hope that helps some of you who are new to trading or creating a business plan for your trading. And again, this is something that you definitely want to do. Um, I would do this for every single trade for the year because let's say let's say I made a mistake on a trade and it went south and it became a loser. You know what? Well, when I go to look at my next trade in the next market I trade, whether it's crude oil or whether it's S&P 500 or whatever, and I'm going to be like, oh, you know what? Let me go look at my journal just to see that because I remember I had a trade like this in the past and something went wrong and I learn from that mistake and I don't do it again. So I hope that helps everyone who does not know how to create a trade plan. And again, this is one variation. There's professional traders out there that may have even better trade plans, I'm sure. So definitely use this to your advantage. Create your own system, create your own rules, and I hope everyone has a very prosperous trading year. If you guys enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And as always, my friends, trade what you see on the charts. Trade well.